Okay, so I'm working on top-down analysis, and I got my 3 screens set up. I'm watching this guy on YouTube. I got my 3 screens up. My first screen on the left-hand side is my direction. Top right-hand corner is my location, and the bottom right-hand corner is going to be my execution stream. So from what the dude said in the video is you want to mark off on the 15-minute screen. I just happened to sync them all together. You want to mark off the top from the past few days. So today is Wednesday, but I'm working off of Monday and Tuesday. I'm doing a replay. This is my first time doing a replay. I'm not gonna lie, I'm a little irritated with this. I don't like to be confused, but okay, you know, whatever. I'm just whatever. So I'm trying to see if pretty much what I'm doing is correct so far. So what I'm doing is I'm just gonna take a screenshot, ask ChatGPT, you know what's T. I went ahead off of my 15-minute. I put based off of, let's zoom in a little bit, based off of the previous. I need a bigger screen. Like I don't know. I feel like today really not my day, but you know, whatever. We gonna make it work. I put at the top. I put this is the, what did he say? The highest levels. The highest levels. I don't know what it's called right now, y'all. I don't know. The highest level from the past few days. So the day, well, he was kind of going off of what I think was the day before, but I'm just going to base off like the past 2 days, whatever. So this is the past 2 days, the top levels that they've gotten to. And then I put another zone at the bottom layer that they got to. He also was saying when the candles, when we're in between these zones, you don't trade. You wait for it to break out of either one. That's when you want to really get your trade. Which, what I'm actually looking at, funny he says that. If, oh, y'all can't see how close it's, yo. Why is he so close? Okay, they just be doing anything out here, bro. Anyways, I'm looking at that 15. Okay, this is where a little realization. Looking at the 15-minute, he was saying, you know, you gotta wait until it breaks out of either one. And what I'm looking at is it is breaking, or soon to be breaking out of the top level zone, possibly. I mean, it's close up there, close enough. I don't know yet. But I was looking at this one. This is 4 hour. The 4 hour chart. And I just wanted to see. So in my eyes, it was bearish. It was bearish. Now the current trend, I believe to be bullish. So I just want to see if I'm right. And I'm gonna ask ChatGPT. Come on. Y'all about to irritate me. Put my picture in here. Okay, hold on. On the left-hand side, I have my 4 hour chart as part of my top down. Oh no, analysis. Oh, my bad. Okay, as part of my top-down analysis, I believe this trend was bearish, but it is coming bullish. Well, it is bullish as now. Is this correct? All right, let's see. What the market was doing was bearish. Look at the left half of your 4 hour chart. You can clearly see the lower highs, lower lows, strong impulsive drops, weak pullback. That's a downtrend. Hold on. Lower highs, lower lows, strong impulsive, fast. Strong fast drops, weak pullbacks. Strong fast drops, weak pullback, as in no rejection. Let's look. Okay. Here. Lower highs. So bearish, they open at the top, they close at the bottom. So you got a lower high, you got a lower low. You got a lower high, a lower low. A lower high, a lower low. Okay. It says strong, impulsive, fast. Okay. Okay, we see some here. This is within 4 hours though. Okay, more. I really don't understand. What about this gap here, though? Well, what about this gap here? What about this gap right here? Can you explain this gap to me right here? Let's put a circle around here and ask if you can ChatGPT. Just take the filling out a little bit, okay? Take the filling out, honey. All right, white circle. Oh, make it white, bro. Okay, boom. All right. What about this gap right here? Let's take a screenshot and ask. Okay. So, okay. Strong impulsive drops. Can you explain to me how can I understand that? By looking at this chart, and also I put a white circle over the area that is confusing me because it doesn't seem to have strong impulsive drops with that gap being bullish for a moment. Let's see. Because what you circle is where beginners think trend change. That's what I would have thought. That's what I would have thought. Let me see. But professional think pull back inside of a downtrend. Okay. I understand that. Let me see. It's pullback inside of that downtrend. So this is on this is on a higher time frame. So that's why it might look a little bigger. It might look a little bigger of pullback to me. This is on a higher time frame. It might not look a whole like that strong on a lower time frame. I'm gonna ask though. Which circle is where beginners think trend change? I would have. Especially in 4 hours, I would have. Listen, okay. What is an impulsive move? Forget indicators. Just judge. Oh, you know what? You judge impulsive by behavior, not color of the candle. Seriously, bro. All of a sudden, my wrist want to be all strong. All right, I'm just trying to understand this a little bit. An impulsive move is when one side of the market has clear control. Okay, that wasn't clear control because we need to have proof that we're in clear control. I remember this from the notes. You want to have those strong moves. You have clear control, little pullback, and you need to have some evidence to. So if it was going to be bullish, we should see at least 2 to 3 candles still going up. But that third candle, I would say 3. I would say 1. Okay, I'm looking. 2 is gonna tell me what we talking about. 3, I feel like 3 is gonna give me the actual confirmation. What we doing? And then maybe I'm thinking. I mean, that's what I think. Between 3, you should be able to see if it's going through with those. Let me look at my notes. Hold on. I gotta refer back to my notes real quick because there was one more thing that I think. Hold on, let me go back. There was one more thing that you needed to know. Fast move. That's what we call those fast moves. The candles are bigger than the recent ones. That's why, did I say that already? The candles are going to be bigger. The direction is obvious, and it should break the recent high low. So those candles should be bigger. So let me scroll back up. Let's see. Those candles, we got 1, 2. So it was big for a minute, but then clearly it slowed down right here. So that's where we had the trend change for 3 hours. I mean, these candles are 4 hours apart. So 4, 8, 12. So for 12 hours, it was a trend change, but then it was at least for right here. What I'm thinking of. Okay, it was technically a trend change on a smaller time frame. I gotta realize I'm looking at a higher time frame. If that makes sense. I'm looking at a higher time frame right here. So this right here, these are 4 hours. So between 4 hours, we got a lot of time. It had, time to do side. We had to go back to our levels. What they call it, liquidity grab, I believe, to make sure that okay, cool, we're gonna be actually cool. We're going through the move to go back down bearish. I hope that's what I'm thinking is right. I feel like that's what you gotta have pullback. So on a higher time frame, no matter even if this was on a lower time frame, I feel like okay, if I'm looking at this as like a 5 minute, that's not bad. If I'm looking at it, if I'm looking at the 4 hour chart as if this was a 5 minute, that's not bad. 5, 10, 15, boom, boom, bam. Go ahead and take it all the way. You can wait that out. But if you're waiting 4 hours, as if you're trading like this 4 hour chart, that's what it is. And then it went right back down. So strong impulsive moves, fast moves, a little bit of rejection right here, right on the outside of that circle, a little bit of rejection, and then it went ahead and did what it needed to do, going downwards. Okay, so let me go back. Okay, so tell me more. First, what is an impulsive move? Forget indicators. You judge impulse by behavior, not color of the candle. What do you mean? You judge impulse by behavior, not the color of the candle. What? Okay, let's see here. What do you mean by that? The sentence is honestly where trading starts to make sense. When beginners look at charts, they think green candles, buyer strong. Yes, okay. I can understand that. When I see a green candle, especially a big one, I'm thinking, okay, buyers are stepping in strong. When I see a red candle, and it looks like, a big body, I think, okay, well, sellers are stepping in strong. That's initially. Think of it like pushing a car. Imagine 2 people pushing a broken car. Strong person pushes once, the car rolls far and fast. Weak person pushes many times, can barely move and stops. Both are pushing forward. Both are pushing forward, but one clearly has control. This is exactly what price does on a chart. Okay. I get what you're saying. Okay. So what is behavior on a chart? Behavior, how hard the market had to work to move that price, not what direction it moved. You read behavior using effort versus result. I'm not understanding that. Strong moves, impulse, few candles, big distance, almost no hesitation. Price looks like it teleported, one side dominated. Weak move, many candles, small distance, lots of overlap. Wicks, price looked like it's struggling. I feel like that looked like it had a good run. Well, I mean, it was strong. You can have many green candles, but weak. You can have many green candles, but they're weak. Price climbs slowly, keeps pausing, overlapping. That means buyers are struggling. They are not in control. Let me see. Does it look like they're overlapping? They're not overlapping at all, though. This green area where this gap is at, it didn't overlap at all. It shot up and shot back down. They're not overlapping at all, so that's what I'm not understanding. That's what I'm actually not understanding. The market tells the truth through speed and ease, not direction. Speed and ease, not direction. Direction, what happened? Behavior, who caused it? Simple phrase to remember: the side that moves price the easiest controls the market. Oh, the side? I'm talking about, oh, like I'm catching on. I thought I did for a second. I thought I caught on to something for a second. I really didn't. So once this clicks, charts stop looking randomly, start looking like, okay, so take me back. You said, I still don't understand. Okay, so let's scroll back up for a second because I still don't understand. It looks like buyers were in control for a minute, so. Okay, so let me go back and let me make this circle right here. Let's make it, can I make it into like an oval? Or, how about this, right here? White circles. Can we copy and paste on here? Yep. Yep, right here. Okay, so right here. So I put three circles right there. So we're gonna take a new screenshot. Put it into ChatGPT. All right. On the 4-hour chart, doesn't look weak or overlapping to me. So look to me as if it's a trend change just for a moment, and additional, or even if I'm thinking about the lower time frames, if I'm thinking on a higher time frame, it could look like a liquidity grab. Okay, let's see. You bitches is messy. Let's see. It's getting a little dark. This is really good catch because what you mark is the exact spot where traders either start understanding market structure or keep getting trapped forever. You're not wrong for thinking it looks bullish. It does look bullish. The mistake is what time frame you're letting judge the story. Okay, so let's dissect those three circles slowly. First, zoom your brain out. The 4-hour candle is the story. Everything inside it is just noise. Inside one 4-hour candle lives 48 5-minute candles. Okay, hundreds of trades, multiple fake trends. Okay. It can be multiple fake trends that happen inside of that 4-hour window. So a lot can happen within that 4-hour window. Okay. So yes, inside that area, there were real bullish trends. But on a lower time frame, not on the 4-hour narrative. Okay, so let me go back and look because was it? If we're looking at it on a 4-hour time frame, it would not look like a trend change. On a 4-hour, okay, that's clicking because when I'm looking at it, comparing to where they stopped at, on that 4-hour time frame, it's not going back up to where our last highest high was at. It's not shooting back upward. It went back up a little bit. If I'm just thinking on 4-hour, it went back up a little bit and then came back down with that strong who's in control, who's your daddy type energy. Okay, I can get that. I can get with that. Okay, we're thinking about, so that's where my mind was at. We're thinking too much about what's happening inside rather than just looking at the bigger picture. Like I said, zoom out. We're looking at the 4-hour time frame. Where we at? I lost my thing. Okay, where we at? It says, so yes, inside that area there were real bullish trends, but only on, so it was only bullish on a lower time frame. Now I understand that it was only bullish on a lower time frame. That I can't think about that lower time frame because it's still bearish on the higher time frame that I'm on. It did not show signs that, it did not give me confirmation that the trend did break outside of that zone on the 4-hour. It didn't give me that confirmation. So if I was to, you know, like if my, let's say my, we'll be like here. Let me see a little rectangle real quick. This is just random, you know, off the dome. Let's say we're here. But, oh, wait a minute. Let me get another one. Let's say these are the spots, right? If these are the spots, let me change this color real quick just because I just want to understand. Let's make it blue. Real quick, y'all. Just want to understand real quick. All right, cool. So if these are the spots, technically we're still in. Okay, so if technically we're in between these two zones, this is just rough drawings. I'm trying to understand. We're in between these two zones. When that price drops down, boom, we're still in those zones. We almost making our way down to the bottom here, but we gotta have pullback. They were saying healthy candles and healthy trends, they have pullbacks. So we had a pullback, which I thought was bullish. I thought it was gonna change the whole trend, but it didn't because we ended up coming right back down and we came down out of here. We did not make our way up here at all. So if I'm looking at it like that with my zones, that's where I correct myself. I guess that's where I can correct myself because no, you had some good pullback, but clearly sellers made sure to be letting known that they are in control. All right, cool. Let's finish reading. So, all right, cool. So what you circled move actually is, the move is not buyers taking control. Buyers didn't take control. They tried a pullback strong enough to trap sellers, but not strong enough to change the structure. Okay, it didn't change the structure. It was a pullback, but it wasn't enough pullback to change the structure. This is called a corrective rally. You had to explain that to me. Corrective rally. An internal bullish structure. So that sounds like what it is. It's actually deeper. Turn the lights on. Oh my gosh, it got dark. My bad, y'all. Okay. Corrective rally. So that's what's happened. That's a little internal stuff. Here's the proof. Structure logic. Before the circles, there was lower highs, lower lows, lower highs, lower lows. Take it back. Let's see. Just oh my gosh. Here we had starting. Let's see. Lower highs, lower lows, lower highs, lower lows. The lowest point. Here we go. Lower lows, lower lows, lower lows. We got lower lows, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Okay, that's correct. Y'all right about that. So before the circle, we had lower highs, lower lows, lower highs, lower lows. During the circle, price rallies, but does not break the previous swing high. That's why I need to understand the swings. Let me try to see if I can draw our swings for our lower lows, lower lows, lower lows, lower lows, lower lows. Okay. It said, I don't know if I'm drawing that right or not, but it said, does not break the previous swing high. Okay, that swing high. Okay, swing high is right here, right? Boom. That's that previous swing high. I'm trying to understand the swing highs, but swing highs, swing lows, whatever. So I can understand all these colors and stuff. Okay, so it said, I think that's what I'm pretty much saying. It didn't break that highest point. So it said it does not break the previous swing high. That's where our zones would be at. Price makes a new, after the circle, price makes a new lower low. After the circles, price makes a new lower low right here. Okay, now we're talking. It makes a new lower low right here. We got another low, even lower, and then that right there is where I would say possibly, I think, not even, the trend has shown after this point from here on that the trend is changing. And that's exactly where I thought right here at this moment, strong, fast, impulsive move, clear control, evidence to back it up. This is where our trend has become bullish. That's what I wanted to understand. Okay, that's what I wanted to understand. I just had to talk myself through it, honestly, and ask ChatGPT because I wanted to know. It did look, but I got a deeper explanation and a deeper why. It was bearish, it's become bullish, and it currently is right now. Still bullish overall. What we're looking at, it says, so the sequence, price makes a new lower low, so the sequence never changed. It didn't break that top part, so we're good. Where's he going? Okay, and this is the law. A trend only changes when the opposite side breaks the previous swing point that created the trend. Okay, so I can understand that. I need to write that down. Check that out. All right, so anything else y'all have to let us know about that? Buyers never broke the high, causing the down. Wait, the buyers going to green bullish. Buyers never broke the high that caused the downtrend. So sellers, they never lost control. Because y'all didn't outdo us. Why it looks strong? It looks strong because you're seeing momentum, not control. Control will actually be, we actually broke that market structure. Okay, the market often moves aggressively against the trend to take profit, grab liquidity, invite breakout traders, fill large sell orders. That's why it feels real. Okay, I'm gonna ask them to go a little more. Explain to me more why it looks strong. Why do I feel like it looks strong? What institutions were likely doing? Step-by-step psychology. Market drops, retail starts shorting late. Shorting is sell. Okay, so retailers are selling late. Price rallies fast, shorts panic closing, breakout traders go long, smart money sells into them. So this is something that I'm gonna have to see. This is more so what's happening behind the scenes. Smart money sells into them, market continues down, so your instinct was close. Not a trend change, yes, liquidity interaction, but precisely it was distribution. It was a distribution pullback inside of a bearish trend, not a grab above the highs. So I guess that's where you gotta make sure that you stick into strategy. Just because I seen some movement, I'm like, oh, I would have thought like, oh yeah, let's get in on that. But when you look at it, what is it really doing? It's not breaking that swing high that they had. They playing a little game inside. What's going on behind the scenes that we don't know about? They just playing around, doing whatever they doing that we don't know about. Okay, a reloading phase. Okay, so when is this reloading phase? I'm again thinking of liquidity grab. I don't know what else is going behind it, but I'm thinking for me to understand easily a liquidity grab. The clean way to tell next time, ask one question only. Did buyers remove the last point where sellers proved control? Okay, so did the buyers remove that last point where sellers proved that they were in control? What? Did buyers remove the last point? Sellers were in control, that swing high, right? That last swing high, sellers showed that they were in control because the trend was going down. Did the buyers remove that point? Did they break out of it? Okay. If no, it's just a pullback. Okay. If yes, it's a reversal. So let me go back and see what we're looking at here. This, I wonder, so now I want to ask them next, what about this trend right here? Did they remove the last point that they showed that they were in control? They didn't. So that's why I was thinking in the 4-hour chart, I was thinking this trend is still bullish. That's what I'm initially thinking. This trend is still bullish, bro. I mean, I'm tripping. I'm thinking this trend is still bearish because they didn't come back up and go higher up just yet. I'm thinking this is still a bearish trend. I'm about to ask chat. So that's what I think. You're actually thinking correctly. You just haven't separated internal trend from external trend. I didn't know that was a thing. But I guess that's what the whole process of top-down analysis is for you to, figure out. So the overall trend, what's going on, and then once you start to zoom into what's really going on into details in those lower time frames. Want me to show you the same spot would have looked bullish on the 5-minute, but bearish on the 4 at the same spot? This is the aha moment. Let's say yes. And can you tell me if I'm correct or not? But I believe that the 4-hour chart is still bearish, even though there is strong bullish candles happening currently, but they haven't broken the swing high, in my opinion, that the sellers the broken that last swing high market that the sellers set off. What do you think? Okay. The only thing we need to sharpen is which swing high actually matters. That's what I was also wondering too, because on the chart there are many swing highs, but only one controls the trend. Which one? Your statement 4 high is still bearish because the last swing high hasn't been broken. Possibly correct, but only if you're referencing the correct external swing high. Right now, the market has broken the internal downtrend, which I'm thinking external. I think what I'm thinking is external. Broken the internal downtrend, but may have not broken the external downtrend. Wait, broken the internal downtrend, but may not have broken the external downtrend, depending on which high you're using. Okay. Internal, early warning, yes. External, true reversal. It's not, is the 4 hour, are we referring to the 4 hour, hold on, are we referring to the 4 chart as external or internal? Question mark. That's the first question. Let's visualize 3 circle area. Inside those circles on the 4 hour, on the 5 minute, it looks like uptrend, pull back, higher highs, pull back, higher highs. So a scalper would scream bullish, yes, but zoom out on the 4 hour, that entire move equals one pullback candle cluster. I understand that, okay? So both can be true at the same time. On the 4 hour, it's still bearish. On the 15 minute to 5, it's bullish. Okay, so I guess that's something you want to also be watching out for. Now, the real key, which swing high matters. Yes, a trend change only when this happened. The move that created the downtrend gets violated. Not a random high, not a small pullback high. So, the swing high that I had, did I put that swing in here? I don't think I put the picture on here. Nope, I didn't. So I'm going to have to insert a picture. Okay, well, the next set of bullish candles start to happen. That's what I'm referring to now. Okay, let's see what it's talking about. Now you're asking right structure question. This is exactly what traders stop guessing, start reading the chart correctly. Are we referring to the external and internal are not fixed time frames? What? They are relative to the trend you are studying. What? Snap. Did y'all see that? The truck behind him. Okay, think of it like zoom levels. 4 hours, swing highs and lows on 4 hours. The 4 hour itself is an external structure for your bodies. That's what I'm thinking. Now, okay, everything inside at 15 is internal. Okay, now let's look at the swing high you drew. You marked the high where the sell-off began. Right, that's where it began. Did price break that high that caused the bearish trend? Let's track the history. The market topped. What do you mean the market topped? So let's create a lower low. Wait. What does market topped mean? Hurry up. The place where buyers lost control. Okay. Buyers lost control. Okay, sellers created a lower low. Trend confirmed bearish. Price pulled back multiple times in that area. Price continued down. Made a new low. Now price is rallying again. Current bullish trend. Oh, okay. So this is another consolidation area, I'm assuming. The real check is, did the new rally break the high that led to a lower low? So let me go back and see. The lower low is right here. Get these drawings on my screen. What did it say? Did the new rally break the high that led to a lower low? The high that led to a lower low. The high right here. Oh, okay. I'm assuming. This would be that high. I'm thinking this would be that swing high right here. That led to a lower low. That led to a lower low right here. That was the swing high that led to a lower low. Am I right? I'm going to take a screenshot and ask ChatGPT what you think. Okay. I'm using white. Let's see. Not yet, which means it's still bearish. So let's see. But it did. Or would we be talking about this swing high? Or would we be talking about this swing high? Would we be talking about this swing high? Which swing high are we talking about? Oh. It just looks so ugly how I'm drawing it. Swing high. Number 1. I'm just gonna put, because I want ChatGPT to be clear with me. Take this off. 1. Another text box right here. 2. Put this right here. 3. Okay. Screenshot. Enter screenshot in the ChatGPT because we can't really Okay, so when we're talking about the new rally that's happening, which swing are you referring to? I labeled 1. The swings I drew in white. And with numbers 1, 2, and 3. see what it's talking about. It's getting a long video. 1 is a lower high, 2 is a lower low, 3 extremely low current bottom. This is just an extension on the same bearish leg. So far, everything valid bearish trend sequence: high, lower, low. This was my I thought this was my higher high, or this is my lower high. This will be a lower high. No, we already had a lower low. So for a bearish trend, you need to have lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. We had a little dibble dabble situation here. Now we're back here. Still compared to this, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Okay, I'm trying to understand. Trend is still bearish. Now the rally happened after 3. Okay, yes, after 3, this is where our rally is happening right here. Explain this to me. This is the part you asked about. When price rallies from 0.3, traders naturally compare it to the closest high. Okay, 1 or 2. Okay, so I was putting it too far back. I should be putting it at the closest high. But the market does not care about the closest high. It cares about the last point. Oh, my bad. It cares about the last point sellers defended before creating a downtrend. It cares about the last point sellers defended a position before creating a downtrend. Sellers defended their position at 1. I feel like sellers defended their position at 1. Would you say that's where the last point that they defended their position? I think sellers defended their position at 1. Do you? Sellers last defended. Ask my question real quick. Yes, okay, that's what I was saying. Yes, so that's what I'm saying. So technically we're still, so I'm just trying to say we're still in a bearish trend. Even though it's green, even though everything is green right here, we're still in a bearish trend because this was the last time they defended themselves up here. After that, yeah, like what? Y'all ain't topping us up here. Y'all not topping us up here just yet. We still down. Y'all doing whatever y'all look diddly dabbling around and stuff, you know. But y'all still ain't topping to where we at. So we ain't worried. Once y'all get up here, that's when we'll get to, doing our 1, 2 and stuff. That's where our resistance is at. Okay. So let's go back to what they said because I didn't finish. But the market does not care about the closest high. It cares about the last point sellers defended before creating a trend. I'm gonna have to write notes on this. The controlling swing, very important. The real level that decides trend change is swing 1, not 2 or 3. Exactly. Swing 1. That's what I'm understanding. Because 1 is the last place buyers attempted to control before sellers drove the price, making new lows. So if the price breaks above 1, sellers can no longer maintain lower highs. The downtrend structure is then broken. Once they reach that last point where sellers had control, that's when the structure is broken. That's what I know. But was I understanding that? Yes, kind of. Okay, I just need more confirmation. What breaking 2 or reacting from 3 means? Breaking above 2 is normal pullback. Let's see. Breaking above 2 is normal pullback. So you're telling me this right here is normal pullback? Oh, yeah. Okay. Kind of the same thing here. So if I was zoomed in right here, that's exactly what we'll be looking at again. Because this was that first point up here. This was that higher high up here where, once again, sellers came in and did they won. But this part right here, y'all between here and here, y'all weren't talking about nothing. Y'all didn't break that. So that's why we're still bearish. Okay. Okay, I understand that. Bouncing from 3 is a correction. Bouncing from 3 is a correction. Why do you say that? What is it? Bouncing from 3 is a correction. Only breaking above 1 changes the ownership. Okay, that's the bigger picture that I have to understand. Breaking of 1, which is that structure, that is our new current structure, changes the ownership. So that will not change the trend. Market structure. I use market structure and trend together as 1, even though they sound like they possibly could be different, but I feel like that is 1. Why traders get trapped here? Most people use the nearest swing. You shouldn't use the nearest swing. This is on a higher time frame though. This is strictly on a higher time frame. Strictly on a higher time frame. This is strictly on a higher time frame. I feel like you wouldn't use a nearest swing unless you're on the lower time frames. Let me make sure, okay? One section you mentioned why traders get trapped here. You said most people use the nearest swing. Which is that correct because of the time frame being on 4 hour? And if you were on a smaller time frame, you would use that. We use the nearest swing based on that time frame as your for the internal. Please tell me I'm correct. Yes! Yes! That's what I'm talking about. Yes! I'm understanding. It makes sense. So I just had to zoom out a little bit. We're looking from zoomed out, not zoomed in. So just differentiating right there. Oh my gosh! Okay, so explain a little bit. It is correct swing depending on the time frame I'm analyzing. Yes, you don't have one market structure. Exactly, you have stacked market structures. Exactly. So okay, that's what I'm understanding. The swing you respect most belongs to the time frame you're trading. Absolutely. So the one that I'm gonna respect the most will be that 5-minute one because that's the one that I'm actually doing my execution in. Now, okay, progress. So the mistake traders make is not which swing they choose. It's mixing swings from different time. Okay, so that's what I was, okay. Apply it to your chart on the 4 hour, your bias time frame. We care about external structure. So the important level is swing 1 because it controls the 4 hour trend. We ignore tiny swings inside of it. Understood. On a 5-minute, your entry time frame, now the story resets. So that's why I have to do my top-down analysis on each 3 screens to make sure I'm understanding each one. The bigger picture, the middle picture, and the little picture where I'm actually about to be at. Because if that little picture starts catching up with the bigger picture, then I can kind of use one hand in hand. Right? Yes, I believe so. The nearest swing on the 5-minute, the nearest swing is correct because that is the structure on that time frame. Understood. Why try to get trapped again? They do this unconsciously. Wow. See 4 hour. Okay, so you see the 4 hour bearish. You see 5-minute bullish break and assume the market flipped. I can see why you want to pay attention to those different time frames now. Because you're confusing one structure with another structure. When those are 2 different structures based on the time frame, they're 2 different structures. One is the bigger picture. Okay. Clean workflow, you want 4 hour. 4 hours telling you who owns the market. External swing. Okay. That's just like, oh, okay, we know it's still bearish. 15-minute, where are we inside the move? Okay, where are we really at inside this market? 5-minute, well, when do I want to enter in to, start doing a little dilly-dilly? Each time frame has its own valid swings. Understood. So your understanding is correct. On higher time frames, you structure swings like one. On lower time frames, you generic swing. You just separated bias from execution. That's a major breakthrough in the charts. I just separated my bias from my execution. My direction, that's what this guy was talking about in the video. My direction is my bias. My execution is down in those mini structure. Okay. I just wanted to document that. That's what I wanted to do. That's all I wanted to do. I wanted to just document kind of me going over top-down analysis, a little bit of what I'm understanding, and my thought process on it. Because I can say I was going in the right direction. I wasn't all the way there completely, but like ChatGPT said, I was able to separate my bias from my execution. I think that's a pretty good progress. That's a pretty good progress in my eyes. I think that's a pretty good progress. So yeah. Top-down analysis is about to take me out. Oh my God. See, I love the way that I learn. I like to read it. I like to be able to look at it visually. I like to be able to be hands-on, visual, and reading. And being able to ask as many questions as I want is just a plus. So I have a new mentor, guys. I just paid $21 for ChatGPT upgraded, because you can only send so many pictures to ChatGPT a day. So since I need to study a little more, I'm gonna be sending them more pictures. So now, yeah, and that I literally just had a 1 hour study session. And I'm leaving my study session fulfilled. I'm happy. I learned something. It was effective. I had to ask my questions. Wasn't nobody confused on my question. So yeah, I just want to say thank you to ChatGPT. We did it.